For those of you I hadn't had a chance to say thank you. Thank you for joining us. And good afternoon. Welcome to San Diego Grantmakers webinar, Making Low Risk, High Impact Community Investments During the COVID-19 Crisis. My name is Carlos Medina, pronouns he, him, his, and I have the pleasure and privilege of serving as Learning Services Manager at San Diego Grantmakers. So I will be starting us off today just to review a few of our housekeeping elements so that we are all prepared for what these speakers have in store for us next. First, just want to let you know that on the top of your screen, you'll see where it says Speaker View. Feel free to click Speaker View, and that will expand the screen of the speakers. Might be just easier way to in the webinar. And then I believe we were able, if you could please mute yourselves in this conversation, and then we'll make sure if we need to we'll ask for your participation, we'll get everyone on the same page. And then also this webinar is being recorded so that if there are any details that you want to access later, you'll be able to. And just we ask that you kindly bear that in mind with any questions or comments that you would like to share later on. And I mentioned the chat box last but not least. I just want to share with you that San Diego Grantmakers is always looking to improve our programs, and one way that we do that is with your feedback. At the end of this webinar, you'll receive an email which will include a link to a survey, and we ask you please just spend a couple minutes filling that survey out, which will provide very critical data for our organization and for our programs. And with that said, I would like to hand it over to San Diego Grantmakers President and CEO, Debbie McKeon.
Thank you. Thank you so much, Carlos. Welcome, everyone. Good afternoon. It's so nice to see each and every one of you, and we're delighted to have you here today. As I was reflecting on today's conversation, I was thinking about I've spent more than 10 years in regional associations supporting the growth of the field of impact investing. And we've seen such tremendous growth in the field over that decade that I'm just so appreciative that the field has reached this level of maturation, that when COVID-19 really descended upon all of us, that the impact investing field has mobilized and is taking such leadership. And that we're seeing these incredibly innovative products and practices coming forward that are really catalytic in providing solutions to support us moving to build better, not rebuild, so that we have the equitable economies and communities that we desire. And today's session and the rest of the San Diego Grantmakers Impact Investing series really would not be possible without the support of a longtime leader in the impact investing field, and that is Bank of America. And so I'm excited today to have several of our colleagues from San Diego Grantmakers membership community from Bank of America here with us. But I'd like to ask Pamela Gabriel, Senior Vice President for San Diego Market Manager at Bank of America, to share a few remarks. But before I do that, I just want to say just a couple of things about why I admire Bank of America so much in relation to how excited we are to have them supporting this series. You know, Bank of America has been a leader in impact investing going back at least until 2013, and I'm sure she can probably correct me even before that. But they have 6 investment sleeves across Bank of America in their socially innovative investing portfolio. So it's a huge part of their services into the field, and their clients that they have funds managed at over 17 billion in client balances. So they have a very clearly defined and an admired ESG approach. And it's also no surprise that they support CDFIs, including our 2 speakers today, the Opportunity Fund and IRC. So there's just so many connector points. Pam, I wonder if you could start us off with a few words.
Well, thank you so much for that, Debbie. We are absolutely proud to be the sponsor of the Impact Investing series. You know, as many of us know here today, our communities have been impacted in the most craziest ways through this pandemic. And we simply want to be able to not only be a resource as a financial institution, but as providing thought leadership and just meaningful resources to help us all come out of this stronger together. And before I go any further, just so that you all know, I am the San Diego market manager for Bank of America here specifically. And really, it's just been such a pleasure to work for a company that truly realizes the impact in CDFIs. And so today, I'm so excited to be able to hear from our wonderful CDFI leaders, from Opportunity Fund to IRC. You know, as you had mentioned, we do have a huge investment in CDFIs. And once this pandemic hit, we knew that we needed to react quickly. And so Bank of America committed $250 million to support capital for these CDFIs and $10 million for philanthropic grant funding to support their operations during this time. As you know, it's just the small businesses in our communities are really the backbone, and we just really thought this was a perfect fit for us to give back some thoughts. And so, as we had mentioned, we have given funds to Opportunity Fund. We had given them $400,000 in grants just to help with their operations. I know that there's also capital there as well. Here locally in San Diego, we had given $500,000 in operation grant funds to the Small Business CDC, as well as $25 million in capital for them to lend. I know that we've also done some other things, but besides that, I just truly am really proud to be a sponsor and supporter of the grant makers. And Debbie, we couldn't have been able to do this without you. And I truly hope that you all find the series valuable. And we just appreciate you creating a forum for us to connect during these unprecedented times. So thank you, Debbie.
Thank you so much, Pam. And leadership by example. We love that and thank that. And we also think that though you're hearing a San Diego perspective, that we have our philanthropic funders from all across the state with us today. So no matter where you sit in California, we welcome you and know that you're all contributing. So now we'd really like to kick this off, this conversation, and to do so, I'd like to turn it to my colleague here at San Diego Grantmakers, our Director of Impact Investing, Robert Foster. Just a little bit about why we're excited to have Robert on our team. You know, he's worked for over 15 years in economic development and impact investing, and he's led impact investing initiatives with the State Department. He's worked in a venture capital firm, and he's also served as COO of an impact fintech company. So Robert brings a wealth of diversity of experiences to our team, and we're delighted to have you kick off the conversation. I'll turn it to you, Robert.
Thank you so much, Debbie, and thank you all for being here. So again, this series here is to get everyone interested, involved in impact investing, and as Debbie pointed out, peer-to-peer learning. So I don't want to stand too much between you and your peers, but just a little bit of background. First, we're talking about CDFIs, and we throw acronyms around, but seldom do we actually break them down. So these are community development financial institutions, and they do a world of good out there. And just a little background, they've been around since 1973, and they work to advance economic, social, and political justice here in the United States. There's more than 1,100 CDFIs throughout the country. And as our speakers will point out, they offer a diversity of causes and geographies that they serve. And nationwide, the CDFI industry manages more than $185 billion. And when we think about entering into the world of impact investing, it's really kind of hard to be a CDFI when you first start. And Jay and Amy will talk a little bit about why that's the case. So one thing to keep in mind as you go through all this, we're talking about two excellent CDFIs, some of the best in the nation. I mean, you have the International Rescue Committee as well as the Opportunity Network, and we're fortunate enough to have their CEOs here with us today. But if you do want to dig in a little deeper, check out the Opportunity Finance Network. It's a hub of all the CDFI activity here in the United States, and it's really compelling. So without further ado, let me first introduce to you Jay Dunn of the Dunn Family Foundation. And Jay is a seasoned leader, and he and his family put a lot of thought and investment committee into CDFIs as they were making a decision. And Jay, could you introduce yourself and talk a little bit about what that decision-making process was like? And after we talk a little bit about your experience, we'll move over to Amy Millington from the eBay Foundation. So thank you.
Sure, it's nice to be here. Thank you. Just as background, I'm actually talking to you from the East Coast. I'm based in Washington, D.C., and our foundation and our family offices in Massachusetts. But I think the idea is that I can, coming from a similar perspective that many on this call might be as well, whether you're a family office, a foundation, or an impact investor. And so hopefully not talking too basic or too sophisticated. I guess just a little bit of background of our investment strategy and how we got to CDFIs specifically. So about 2 years ago, we made a family office and foundation decision to transform or amend our investment strategy to focus on or to commit to socially responsible or sustainable investing across all of our asset classes and across all of our assets, not just the foundation. And within that decision to focus on responsible investing, we made another specific decision and an allocation to impact investing, or what I would call higher impact investing in the specific areas, specific issue areas that were aligned with the mission of our foundation. Without getting too much into the semantics of how to define impact investing, for us, just the way we kind of simply thought about that is we were proactively willing to take on more risk or accept a lower than market return or be more patient capital in order to try to generate more or higher impact in the areas of interest to us. Just as an aside, some of those areas of interest to us, because it fits into this discussion of CDFIs, for us, for our foundation, for our family, specifically we're interested in energy access or community renewables, however one would define that. We're specifically interested in healthy food systems and sustainable agriculture. A little more generally, we're interested in community development, specifically job creation, support for entrepreneurs and small businesses, particularly in underserved communities. And then also specifically, we're interested in refugees, the broader issue of forced migration, displaced people, and we are interested both internationally and domestically. Although we have some specific geographical areas of focus, either internationally or the communities in which we live. And then just one more thing about our investment strategy. So we made that decision, but of course I also want to point out, as an investor, we don't pick stocks specifically. We don't make direct investments in companies. We are relying on fund managers or money managers or intermediaries to help us navigate and implement our investment strategy. So where I'm going with this, obviously, right, is we rely on intermediaries to make our investments. So in the same way, when we're thinking about impact investments, we're looking to intermediaries who are experts in the areas or the issues that we're focused on. So where do CDFIs fit into this? So, and again, I hope I'm trying to be not too basic, but from my perspective, or where really we came from, CDFIs are really a fantastic way to either, number one, get started in impact investing, just to if you haven't done it before, it's a way to kind of to ease into it, either can perceived as lower risk or a very small investment size, which I'll get to in a sec. And then secondly, CDFIs are great because it allows you to build a portfolio of impact investments that can either be very targeted on a specific area or could go across a range of issue areas or geographical areas. So why do I say it's an easy way to get started? So these are loan products, just to be clear, we're calling them impact investments, but these are loan or debt instruments where you're lending money to a CDFI that is in turn lending it to its clients. So these tend to be tend to be lower risk. It's a diversified portfolio of many different loans that they're lending to. They often have good or very good credit history and repayment history. So, without kind of sounding too much like an advertisement here, you can make a loan, have an impact, get repaid, and do it again. These also offer many different sizes. We found you can do $25,000, $50,000, $100,000 loans or notes, but some CDFIs offer something that's kind of more like a retail product, $1,000, $10,000, 1 year, 3 years, 5 years, kind of different sizes and terms for different appetites. And then lastly, as I said, you can really build a portfolio. And for those that like the idea of portfolio diversification. So for us, we made this decision to do impact investing, and then we specifically chose to develop and implement a CDFI strategy because it allowed us to find and make community-focused investments in our specific geographic areas of interest and our issue areas of interest. So that means that we have found and focused on CDFIs that are maybe in a particular state that we're interested in a particular region, as well as nationally. And then we've also found and supported CDFIs that are focused on community renewables, one of our areas of interest, that are focused on healthy food systems and sustainable agriculture, one of our areas of interest, job creation and helping small businesses and entrepreneurs like the Opportunity Fund that we're going to hear from. And we have found a CDFI that's focused on refugees. That is a particular area of interest, and we'll hear more about that IRC program that we support. Robert, should I say something about COVID specific now, or wait and come back to that?
Why don't we circle back to that in a minute, and if that's all right? And maybe right now, Amy, if you could talk a little bit about your experience when you were at the eBay Foundation. Again, Amy Millington, former CEO of the eBay Foundation, and organizationally, what was your thinking as you began to deploy capital to CDFIs, and why do you think this is a particularly interesting strategy for someone that's coming in as an early stage impact investor? Amy? Okay. Well, on that note, Jay, why don't we talk about I'm sure it's probably a tech glitch that she was on earlier. Can you please lay out why you had this foundation early on with your research that you've done? You had an investment thesis. Why do CDFIs matter more or less in this COVID era? What's your thinking now, and how are you orienting your capital now that we're in COVID vis-a-vis before with respect?
Yeah, I mean, I think you'll hear it better from the CDFIs, but I've found twofold. First of all, on the grant making side, as a grant maker, while we often kind of believe in maybe some large institutions and their ability to have a wider focus, we also believe very much in supporting grassroots organizations that are on the, hate to use the term, but the front line. And that's where these CDFIs are. They're at the grassroots level. They are in the, look at the first word of the acronym. They are in the community. They are just absolutely grassroots focused in whatever area or geography you're interested in. So when you're in a crisis like this, being at the grassroots, being able to really adjust quickly and adapt quickly to a crisis, not one that was ever anticipated. CDFIs are just appear to me, and thus we have followed up with additional support in this crisis to some of the CDFIs we're supporting, are able to pivot and take what they were doing and adjust it to this crisis. Not just the two best examples. I said we're interested in healthy food systems, and so in CDFI that we're helping there is right there trying to address the food crisis of getting food to folks who were not able to get it otherwise, and they were able to pivot very quickly and change or adjust what they were doing. And then Khosrow will talk about for the IRC, trying to help refugees with emergency relief, where refugees might not qualify for the stimulus package, you can't qualify for unemployment or things like that. And we're able to very quickly put in place a program to make emergency loans to refugees and asylum seekers. So see, again, they're just at the ultimate grassroots organization that are very flexible, yet very experienced and have the systems in place to manage. You're still muted, Robert.
I know. Sorry about that. You know, in another 3 months, when we're that much more experienced with Zoom, we'll get past that. But right now, we have these perennial mute delays. So we figured out the tech glitch, and I think Amy is on now. Amy, are you there? Can you, Carlos, can you make sure she's unmuted? So, sorry for everybody as we're working through this. Oh.
Okay.
Oh, there she is.
Yes. Thank you.
Houston?
So Robert, you should probably go on because she's calling back in. She must have had a problem with the link, is what she's sharing.
Got it. All right. Thank you so much for that. Okay. Well, why don't we move over and talk just a little bit, hear a little bit from our two-star CDFIs themselves. Let me go ahead and first introduce Luz of the Opportunity Fund. For those of you who don't know, obviously one of the best CDFIs in the industry. Luz's been with them for what, 2.5 years now, and just their impact right now during the COVID era is profound. And Luz, why don't you open up and just share a little bit about your process, and also maybe you could speak a little bit about the experience you've had with a few of the individuals in the room here, both Bank of America as well as the eBay Foundation. And you're on mute too, by the way.
As you said, time will help. Well, good morning or good afternoon, everyone, wherever you are. Thank you so much for putting this together. This is a great time for us to all come together and hear what's happening in our communities. Briefly, I mean, pretty much all CDFIs serving small businesses work with, low to moderate income, immigrants, people of color, and women owned businesses, all of whom work very, very hard to support themselves and their families. Prior to COVID, because I know these statistics will change, we talked about our clients as real financial magicians, surviving on a median household income of $36,000. And as you can imagine, it takes extraordinary measures to make ends meet, particularly in markets where the cost of living is so high, California specifically. Our customers represent the most vulnerable populations, and they also reflect the rich diversity of the communities that we serve. So about 90% are immigrants, minorities, 60% have low or moderate income, and 32% are women. One of the things that our customers, and the reason CDFIs exist, as Jay was mentioning earlier, is because we work with businesses that are the most vulnerable and generally don't have a banking relationship and are not being properly served by financial institutions for a variety of reasons, loan sizes or industries or documentation, things that, for many lenders, it's very important. What we've seen since the crisis started is that because many of our clients don't have loans and deep relationships with banks, when the one program that everybody's heard about, the PPP program, Paycheck Protection Program, came about, none of these very micro small businesses had a foot in the door with the first round of PPP. And so they couldn't apply because they didn't have a relationship. And so there are a lot of studies out there that show that, people of color, minority-owned, women-owned businesses generally do not bank for their main business with traditional financial institutions. So the first round, a lot of these small businesses were completely out, which was pretty tragic. While the second round got better, and at least Opportunity Fund was finally approved to start offering these loans to some of our borrowers. Many were still ineligible. As you know, these are federal funds, and consequently, immigrants that don't have, status, that don't have proper documentation or Social Security, they just don't qualify for these loans. So that means that there was a significant part of the population of these small micro businesses that didn't get through the door. We kind of thought that would be the case. And so towards the end of March, we launched a 50 million small business relief fund to help the most vulnerable businesses with a variety of support, whether it's payment relief on their loans, helping them with group and one-on-one coaching and technical assistance on a variety of topics, helping to give them more money. Some of these businesses right now need just cash injections so that they can survive the crisis and be able to think about how they're going to rebuild and reopen to revive the economy. And so today we've raised about $13 million, which we're very happy about. To give you an idea about the size of the loans that we did on PPP, it's an average size of $17,000. The national average for the second round of PPP that targeted the smaller businesses was about $73,000, the average loan size. So these are very small loans, but it also reflects the size of the businesses that CDFIs support. These are truly micro businesses, mom and pop shops that employ just a few people, but they're central to the livelihood of their owners and their employees. And so, we are saddened, frankly, that these businesses got missed during the first round. And the second round, many more were picked up, but still not the need. The need far outweighs what they received. And so that's why CDFIs are so crucial, because they're the ones that step in, particularly in times of crisis, to help the most vulnerable to survive. Robert, we can't hear you. You're on mute. We can't hear you.
Robert, you're still on mute.
I know. Okay, I'm off mute now. Good. Sometimes we all would like to have a new computer, and that was one of those moments. So speaking of technology, and thank you so much, Luz, for those insightful remarks. Amy is back with us now. So Amy, please take it away.
Can you hear me?
Yes.
Okay, great. Hi, everyone. Thanks so much for having me on, and it's really a pleasure to be with you today. Just a few things from my perspective that I wanted to share. First of all, sort of as even with 15 years at eBay Foundation, the bulk of that journey was certainly as a grant maker and just a little bit on the impact investing side. So very much a novice in the space and have much to learn, and have appreciated just being on this call and hearing from Jay too. One thing I wanted to contribute is that we also worked through intermediaries, and we were very fortunate to even have an endowment. When eBay went public, they set aside pre-IPO stock, and so we were blessed to not just be dealing with pass-through funding for the foundation, but to actually have an endowment. And so, I think for us, our journey was one of experimentation to some degree, but we also, given that we had the endowment, certainly looked at the opportunity to tee up the conversation with our board of directors on how we could have impact beyond our grants by leveraging that endowment to invest in companies that do business in ways that are consistent with our mission. And given the ethos of the company with which eBay was founded on, definitely a commitment to economic opportunity, and that was always the North Star, has always been, both for the company and for eBay Foundation. And while our approaches may have changed over the years, certainly in regards to how our focus was, that lens of wanting to foster more economic opportunity and inclusion was always at the heart of what we did. I think there's a couple things I can say also about just our experience in responding to disasters as well. And so I think that given the framing of this around how to respond during the COVID crisis, we had some learnings from responding to everything from Katrina to the Ebola crisis. And so I can speak a little bit to that as well. But one thing I wanted to say on just the impact investing was that and how we built out a strategy. I think in working with our board, their primary concern was that we'd be compromising the liquidity needs that we had for grants and expenses to be able to make those investments. And so for us, a win was just taking an incremental approach and getting an agreement to doing a small carve out, rather than trying to get them to commit to, going all in the long term. And so, I think that's sort of one key for this is, if you haven't done any impact investing yet, that incremental can be an easy way to ease in. The other thing I'd add is just to collaborate. We certainly relied on experts. I don't have a finance background, so look to people far smarter than me and just with much more experience in this space. And what was so lovely is how open people were to sharing their own journeys. And so, just being open and looking to others is a great way to make progress in this space. And then I would just add sort of the rationale for CDFIs for us was really around wanting to align to the resources and assets of the company and what was important to the company. And as certainly there was a circuitous path at eBay where the company changed over so many years, and the sort of marketplace's core business that it is today. One of the strategic initiatives that they have is around a initiative called Retail Revival, which is focused on helping small businesses in some of the heartland and kind of smaller cities in the US that have faced economic downturns, helping them get online through e-commerce. So from our grant making and investing lens from the foundation, we looked at how we could complement that initiative and really drive deeper into supporting entrepreneurs from that face the most barriers to accessing capital. And so it's, entrepreneurs from all diverse backgrounds, women, people of color, people that don't have a formal education, that are perhaps formerly incarcerated. It was a very broad lens with which we define diversity. But for us, it was how can we support those entrepreneurs? And CDFIs are such a great community partner because they are so close to the borrowers more than traditional lenders, we found, and able to build out those relationships and modify their loan guidelines for to be able to be the most responsive to different borrowers. And Liz, I'll just I remember talking to your predecessor, Eric, when I think it was called the Lenders for Community Development, but one of the things that he had said at the time was that they were okay with having a certain rate of loan defaults built into the programming, that if they, if everyone was repaying, that they wouldn't be really fulfilling their mission, that the mission is really to try to reach those that have the most difficulty in accessing loans and potentially in repaying them. So, and that's certainly what we wanted to do as well, is how can we help the people that are really struggling to build their businesses and to access capital. And so it was that combination of business advisory services and the patient capital that was most important for us.
Well, thank you so much for that, Amy, and those insights. Also, questions are starting to come in right now, and I would encourage you to keep bringing questions in. But before we drift over to to getting questions, everybody, I do want a chance to introduce Khosra from IRC, the International Rescue Committee. And IRC is interesting because it's one of the few CDFIs, and maybe the only, that has a physicist as one of its founding members. And that particular physicist was none other than Albert Einstein. So Khosra, you're stepping into some big shoes there, but can you please talk a little bit about IRC and what fun the work that you're doing right now, and also just through the lens of the first-time impact investor, what would you want to know if you were a first-time impact investor looking at CDFIs?
Great, thanks for that, Robert. I didn't know who you were talking about at first in terms of the physicist, because we're around IRC, we just call him Al, and I wasn't sure who this Albert person was, but I caught up now. So thank you to San Diego Grantmakers for having me here today, and thank you all for participating. My name is Khosra Movahedi, and I'm the director of IRC's Center for Economic Opportunity, a perfectly named CDFI. That is also a subsidiary of the International Rescue Committee, or IRC. And it is IRC that was founded at the suggestion of Albert Einstein in 1933, and is our kind of parent organization, right? And so IRC is actually a global organization providing relief to populations that have been displaced in 40 countries. Whether they be refugees or internally displaced, or regardless of the reason. In the United States, IRC has kind of a different identity. And what we do is that we support in the initial resettlement of refugees into the United States, and also their longer term integration into the communities in which they arrive. And we do that work through a network of 25 offices around the country, right? So that's kind of the setup and starting point for what we've done with our CDFI, which is to essentially overlay on top of IRC's network, right, across these offices, and to leverage then. So we're making loans through IRC's offices, and we're leveraging IRC's kind of naturally existing linguistic and cultural competence when you do kind of refugee resettlement work. We're leveraging their deep engagement with underserved communities, and we're leveraging their portfolio of economic development programs. And so we come in, right now we're in 16 of the 25 locations, and we do offer small business loans, but the majority of our portfolio is actually focused on the consumer side. And so we make credit building, auto, education, immigration, a whole host of very small dollar loans to try to support families as they climb the ladder, right? The easiest example of how kind of we work together with IRC in tandem is IRC provides the credit training, and then students who graduate from that class can apply to get a credit building loan from CEO, right? And you can see how the two of those then the credit building loan helps you establish credit, IRC taught it to you, and kind of that's the model. And it is within that model that we have, and across any number of programs in the 16 offices, that we've made close to 3,000 loans now over the past few years. Right now, the portfolio is about $3 million outstanding, which is tiny compared to most CDFIs. However, that's $3 million outstanding across 800 active loans to borrowers whose demographics, I think, help paint the picture of who we're able to reach, right? So 70% of our borrowers had bad or no FICO at the time of application. Household income of $28,000 per year earned, and this is across all sites, right? 3.6 is the average family size. 70% of borrowers were within their first 3 years in the United States at the time of loan application, and 85% entered the U.S. as a refugee or under a humanitarian program. And like 5% were native-born Americans that found themselves accessing services through IRC's community-based approach. And at this point, we've made loans to borrowers from over 60 unique countries, which is cool, right? But I think the coolest part is that we've also then maintained a 97% repayment rate historically over the years, consistently deploying capital to families that live on the bottom of the economic pyramid, if we're being honest. Our loans help borrowers build credit, deal with emergencies, buy cars, for work commute, pay for training, and start businesses. For COVID and kind of where it connects to, I think, for investors looking to explore CDFIs, I think our experience with COVID and with JDON is actually a really great illustrative example. So, COVID hits and we have a number of responses, and I'll just give you the short version. Is for our active portfolio, we deferred payments, we reduced interest, and we're going to be flexible with borrowers and kind of figure it out. No one's going to get squeezed during a pandemic. For new borrowers, though, and for folks that are out there now who suddenly find themselves in this, in this kind of unprecedented uncertainty, we rolled out 2 new products. One of them is an emergency grant, which is just cash to support families, especially asylum seekers or those that might be undocumented, that don't qualify for stimulus, UI, etc. But the second product that we rolled out was a 0% loan, like a $700 loan, and you can get multiple within a household. And that was just intended to immediately try to give families some level of access to fast, easy cash, right? No payments due for 6 months, and that was the setup. We designed this product as COVID hit, and we had been working with Jay, who had completed his due diligence of CEO under a different investment request where we were looking to raise loan capital for kind of our normal operations. We had to put that aside when COVID hit. And once I worked with my team to come up with this 0% product, it was one of the coolest, I think, professional moments of my career, frankly, in that on a Monday, Jay approved, and I hope I'm not disclosing too much or anything here, but on Monday, Jay funded a small investment to us to give us the first tranche of capital that we would use for these 0% loans. On Wednesday, we took the first loan application, and by that Friday, 700 of Jay's dollars were already being sent to a recipient in New York who had been laid off, who was about to start a museum job as COVID hit, and now didn't have any immediate access to financing, that was trying to figure things out. 1 week end to end, we were able to turn this around. And I think that really is in many ways a good example of what can be possible, the types of opportunities, the types of community reach, and if you think of having a broader constellation of different CDFIs that might be engaged in the communities, I think that the opportunities for impact investment are just super good. So I think, with that, I'll just, I think I've been watching too much C-SPAN. I was about to yield the rest of my time back to you, Robert, but I'll just, I'll turn it over to you. How's that?
Well, thank you. Yeah, C-SPAN can be compelling these days, but I do hope that this webinar series sponsored by the Bank of America is more compelling. I know some of you are policy wonks, though. So questions are starting to come in from the audience here, and why don't I just start to pass them out first. Luz, quick question. Are you seeing more investors seeking CDFIs as solutions regarding the PPP funding process we've all observed? And can you talk a little bit about how that program is interfacing with CDFIs writ large?
How the PPP program is interfacing with the CDFIs, or how we're seeing impact investors coming into CDFIs as a result of COVID?
Well, yeah, that's kind of where I was going with it. But yes, that would probably be a more direct way to say it.
Okay. So yeah, I mean, we have been truly inspired by the leadership and the support of institutions. And there's 2 components, right? CDFIs raise money in 2 forms in general. One is debt. So capital, impact investing, loans from banks that we then turn around and deploy low-cost dollars and loans to small businesses. And the other component are grants, right? So there's our philanthropic dollars that help us to leverage and deploy those dollars. I will say that, this crisis that we are in the midst of, because we're still in sort of the relief facet, has been funded mostly with philanthropic dollars. So as I mentioned earlier, the fund that we raised, the $50 million fund that we raised, has been a philanthropic fund designed to help borrowers with their needs of, we have about 6,000 borrowers in our portfolio. And so to give you an idea, we have helped over 3,100 so far with a variety of payment relief, whether it's forgiveness, whether it's skip a pay, providing new capital. We've made a little bit over $10 million worth of PPP loans. About half of those have already been funded. We're still waiting on documents from others. But the impact investment, I think it's something that, at least in the US, it has not taken off as much as it has in other markets around the world. And the value that it has, as Jay was talking about, and we see it right now, is that in this time, CDFIs and organizations that will be focused on these underserved, most vulnerable populations, they need to provide very, very low cost of funds, very low cost loans. And the way to do that is by having investments that are patient, that are looking at, getting a little bit of financial return and a whole lot of social return. And that's what impact investors do. And so what we're starting to see, and we ourselves launched a couple years ago, the largest impact investment note of a small business nonprofit lender. And so we are going to be expanding that impact investment note because we saw that the capital that was raised through that gave us the flexibility in terms of the terms, meaning the pricing and the longevity of the notes, to be able to deploy that capital very effectively. And as we get paid back, we can then redeploy the capital into additional loans for additional businesses. So I believe that because of what we're going through, impact investments now have become a very, very important source of capital, particularly for CDFIs that are trying to provide relief and rebuild loans for small businesses in America.
Well, thank you so much for that, Luz. Another question came through from Ingrid of Global Giving, and she asked that if someone has never done impact investing and you wanted to start, how would you begin? And Jay, I think you did a good job outlining that, but maybe you go a little bit deeper and talk about the process you would go through to identify a CDFI that's in your interest area. What is that? What was that process like for you?
I guess I would just back, if you don't mind me saying that CDFIs aren't the only option. There are some other intermediaries that also represent some ways to take a start here that have pretty good track records and all that. Someone like Calvert Impact Capital, Calvert Social Capital, I forget exactly what they're called here.
Calvert Impact Capital, yeah.
Calvert Impact Capital in DC, or Global Partnerships in Seattle, or many organizations that kind of also build a portfolio of underlying investments that give you that diversification and a pretty good track record. Kiva, there's a number of them. And so I'm kind of answering two ways. I either would go to like an organization like that and I would just start looking into what they've invested in. If you go to Calvert's website and look at all of the investments in their portfolio, you get 20 CDFIs they've invested in that might say, oh, that's really interesting, or a number of things they've done internationally. Or we were very interested in sustainable agriculture internationally, microcredit and loans to small businesses. There's an organization called MCE Social Capital where you can make loans or provide guarantees as a way to spread your money out there. So I think you pick your issue area or your geography, and then I would recommend kind of looking at an intermediary that's in that space. You can either have your entire strategy and your entire allocation worked out, and you can spend 2 years doing that, or you can just start with a little step. There's some analogy about the journey starting with a little step. Make a $50,000 investment or a $10,000 investment in a CDFI or in an intermediary, and then you start seeing what they're doing. And I use the term, I'll just start going down these internet wormholes of just exploring and exploring and exploring, and then asking around, which we all do with our investment strategies. You ask around, you get references, you cross-check. But I found a lot of these bigger intermediaries. And so you mentioned earlier OFN as an intermediary or an association of CDFIs. that's a great place to start. But a lot of other aggregating impact investors have a bunch of CDFI investors within that.
Wonderful. Thank you for that, Jay. And again, to those in our audience, we welcome your questions and your thoughts and your ideas here. But as we wait for a few more questions to come, and I do want to ask both Luz and Khosrow, how do your customers find you? What's that process like? And with all the initiatives that are out there and all the sources of capital, why are you first on their mind right now when they're reaching out?
I can start quickly. You know, one of the things that I've been sharing with our team, and we all have sort of talked about, is that, you know, Opportunity Fund is the largest CDFI and small business lending nonprofit in the nation. And it has taken a crisis of this magnitude for people to really get to know our name. And, you know, we haven't done anything differently. We continue to serve the same communities we've been serving with the same responsible and affordable capital. We combined with Acción Network on March 1st. And so now we've expanded our programs and financial coaching and technical assistance to small businesses around the country. But it's taking this crisis for us to now start getting an enormous amount of folks from all over the country, both institutions and individuals who want to contribute to the cause. And I think it's because the crisis has elevated the need and the importance of small businesses in America to such a degree that initiatives that support small businesses now have a higher level of attention. You know, we have a lot of institutions that know of us and others that have done research and, you know, who is helping small businesses in America and CDFIs, who are they? And our name shows up. I mean, literally, I think that's what has happened. You know, organizations like eBay and Bank of America, who have been incredible supporters of ours, know of Opportunity Fund, like many other large institutions, but some of the smaller ones, and even some of the larger ones, like, you know, we got a contribution from NASDAQ. NASDAQ had never been a contributor of ours, but they learned that we were helping small businesses. And like that, we've got, you know, tens of businesses. Same thing with individuals. I mean, we now have raised over $1 million of individual contributions in a 5-week period. From, you know, our name was at the Jimmy Kimmel TV night show, where Jennifer Aniston prompted the Opportunity Fund as one of the nonprofits to invest in. We also had, I believe, Ariana Grande, she tweeted about us. So because small businesses, it has nothing to do with Opportunity Fund. It has to do more with the need that small businesses have and how many people are trying to support. And so CDFIs are the way to support small businesses.
Khosrow?
As I find my unmute button. Yeah, you know, in terms of clients find us through the IRC more and more, actually, though, now that we've taken some steps to at least have an online presence, we're seeing a small trickle of clients that find us through the OFN Network website and then contact IRC or contact us for a loan. And we're starting to see kind of this reverse referral system, which is really interesting. In terms of where investors or anyone else might find us, we're really hard to find. And we've spent the bulk of our time building the thing and haven't really worked on much of our communications or, you know, web presence to date. To the extent that we could be found, though, we could be found on the OFN website and on the CDFI network, right? So in some ways that there are probably many, many organizations that are as, if not far more effective than we are, that may similarly have less of like a you know, visibility, that at a minimum can be, you know, at least put on the radar by doing a quick list of who does have that CDFI certification, because you do tend to instantly be on the radar of a number of institutions and is a way to find us. I'm also happy to report that we'll be updating our website soon, and we'll have some more kind of basic communications going out because it's important, and you know, we're not crazy. So thanks.
So thank you so much for that, Khosrow and Luz. So one last question before we wrap everything up is going to Amy here. You mentioned at the foundation. There were some liquidity concerns as you started to make your impact investments, and you're able to start slow, and CDFIs were a good on-ramp. Can you talk us a little bit about what were those conversations like to make that first impact investment, and what were the arguments that prevailed best as you went through that process?
Sure. Well, and just building on what Jay said as well, we actually did make a PRI to Kiva, and it was in support of their peer-to-peer lending platform, helping small business borrowers get capital from individual lenders as well. And part of that in that conversation was around identifying what our programmatic and financial goals were as the foundation. And for us, with that program, it was really about Kiva was looking to launch in Silicon Valley, and for us, recognizing the duality that was this community here of such tremendous wealth and also huge poverty, and so just convincing the board that it would fit our needs in terms of providing an employee engagement solution, which was part of that work as well, along with the sort of patient capital. And they were willing to go along with it because it was, and looking at it as sort of a grant versus a loan, the advantage of doing it as a loan and getting the money returned at the end of in this case, it was a 5-year commitment, meant that then we'd have those funds to then go and experiment again at another time down the road. And so that was, I think that was just part of the process, was looking at it from just a decision about grant versus loan. The one other thing I would add is just also sort of in coaching our board, especially in kind of responding to scenarios like this, is the need for looking both in the short term and supporting urgent needs, and really about long-term plays in the space. The communities that are going to be most deeply impacted by COVID it's gonna take so many more years to rebound from it, and just part of the conversation with I think board members and those responsible investment committees is really about looking long term and being committed for the long range.
Well, thank you so much for that insight, Amy, and I want to thank everyone here for being with us today, as well as Pam Gabriel, our sponsor, Amy Millington, who just spoke, the former head of the eBay Foundation, Kazra Movadehi of the International Rescue Committee, Luz Urrutia of Opportunity Foundation, and Jay Dunn of the Dunn Family Foundation. I want to thank you all for sharing your knowledge and your expertise and your time with us today. It's been an absolute pleasure. And as we mentioned earlier, this series that we are running, this Bank of America series, there's 4 convenings throughout the course of the year. And the next one will be on June 24th at 11 a.m. And I see that actually some of the members of our audience are going to be participating, including James Cutler of the Silicon Valley Community Foundation. This next webinar on the June 24th at 11 o'clock. And again, please go to the San Diego Grantmakers website to sign up. It's about an impact investing, a journey to address California's housing crisis. And the idea is how a couple of thoughtful California impact investors, there's the Bequest Foundation, which is out of San Diego, as well as the Silicon Valley Community Foundation. And actually, there's a third, and I'm thinking about it. We've got the Chan Zuckerberg Initiative. How those 3 entities are taking on inclusive approaches to build housing faster, smarter, and better than where we've been at in the past. And obviously, as COVID has highlighted inequities, this particular issue is more important than ever. So again, thank you all for being here today. We really appreciate your participation, your learning. Thank you again to the speakers, and we hope to have you all back here on Wednesday, June 24th for yet another Bank of America San Diego Grant Makers Impact Investing event. Have a great afternoon, everybody.
Thank you.